Hey everybody, it's Monday, July 14th, 2025. Today's episode begins with our headline, A Tale of Tariffs and Treasuries. Trump and Powell, best friends forever, or best frenemies forever, as I like to put it. Just wanted to bring up my frenemies idea again, that this whole thing of Trump having to find reason to attack Powell. I mean, the dissent knows what's going on here more than anybody. What they want, I can tell you exactly what they want. They want asset prices to stop ballooning up, like I've said in all of those other frenemy episodes I talked about before, and they want rates to go down. One thing they recently did that I looked over was change SLR requirements of big banks, and I believe this means they can have more treasuries. This was after the April blow up, so I think that this may result in the next bear market action resulting from tariffs and overvaluation and everything under the sun, resulting in what they really want. What they really want is lower rates. It's what they want and it's what they need. It's because for fiscal deficits to not continue to be a major problem from a global perspective, yes, if the rates of borrowing are high and the amount that the US has to pay in interest payments alone is enormous, that becomes more of a problem for the dollar, for US debt, for Powell, who basically controls the dollar. You know, as much as on one hand Jerome Powell wants the dollar to weaken, he wants it to weaken in a normal structural way. He doesn't want the dollar to end. That's the business of the Federal Reserve itself. The death of the dollar would may turn out to be the death of the United States itself. And so I'm going to just continue and say that I think what's going on here is exactly what I said before. Trump and Powell acting together as best frenemies forever. Next headline today, I have big bank earnings out this week. A lot of them actually tomorrow morning, specifically before the open. We include JP Morgan, BlackRock, Citigroup, Wells Fargo, and Bank of New York Mellon Corporation. And not only that, before the open on Wednesday, we also have Bank of America, Morgan Stanley, Goldman Sachs, and then what are the other ones? Schwab, and U.S. Bank. So, a lot of bank earnings, and this can affect things, along with the CPI, PPI coming out this week. Third headline of the day, Bitcoin topping tail. If you follow Bitcoin at all, you're probably highly aware of what I'm talking about already. As I record right now, we have about 3 hours left on the clock for the day. As long as the close is below 100, specifically $120,038, that's a very, very, very bearish candle for Bitcoin. Professionals are looking for it to drop to at least 113,000 before potentially figuring out where it's going to go from there. Some of us like to watch football, some of us like to watch soccer or basketball, and some of us like to watch Bitcoin. I'm certainly going to be watching this as the clock turns 8 o'clock tonight. And I'm still short Bitcoin. Moving on to community topics, what moves, if any, did you make today? Robschild sits on hands. Coming up, as always, tariff updates, the latest tariff update, which I forgot to talk about in the very first headline of today, A Tale of Tariffs and Treasuries. If you opened any news source, you're probably aware over the weekend it was decided that the tariffs are back on August 1st, and so it's a countdown to August 1st for is supposed to really be sort of very similar to Liberation Day, August 2nd, before the markets tumbled 20%. So we'll see what happens. Right now, S&P 500 is still sitting at all-time highs. We'll see how that pans out. As long as it's staying this high, it sort of suggests that the taco trade is still on Trump, always chickens out trade. Anyway, also coming up, like I said earlier, Tuesday we have CPI. Usually that's Wednesday, but this week it looks like it's a little earlier. Not sure why exactly, but Tuesday, Wednesday, CPI, PPI, and Thursday the jobless claims. Remember, the continuing claims week after week are seeing 2.5-year highs and still going up. So that report by itself can be rocking for markets. As always, thank you for watching, subscribing, commenting, and supporting the channel. Daily reminders, macro views, no changes. Read my website to go over these extremely important daily reminders. These are not things to be thinking about, once every few months, but if you're an active trader or a swing trader or short-term investor going in and out of things, speculating in any way, I think these are highly important things to review on a daily basis, at least in your mind. And also no changes to the crystal ball ratings nor the Robschild portfolio. Moving on to the charts, starting with the S&P 500, the SPX, still moving sideways, completely sideways ever since July 3rd. And consolidating a bit here. On one hand, it looks like you could maybe call this a bull flag. Most chartists, pretty much every chartist that I follow and listen to, again, is still bearish here on the S&P 500, expecting a drawdown of at least 5 to 8%, and yet it hasn't happened yet. I'm not sure who's buying at this level, but apparently there's enough buyers to keep it afloat. Like some other people say, this can often be a function of institutions, overnight using a small amount of money to drive the futures up higher, make people comfortable to get in so that they can dump all of their shares into, exit liquidity, as they say, for the institutions. Retailers are buying here, not institutional money as much. Next chart for the day is DXY. This is the dollar index. I believe most chartists now are pretty much on the side that the dollar is indeed looking bullish. I said on Friday the dollar was looking bullish. It looked like it was going to be going higher. This can act as a headwind for risk assets with the dollar rising here. We'll see what happens. But I said it on Friday and I'll say it again. The dollar still looks bullish for now, day over day. Next, I want to bring up TNX, the 10-year Treasury note yield. Some people are seeing sort of this inverse head and shoulders developing, this little mini one. I still see a larger opposite head and shoulders. So everybody's got their eye on the 10-year Treasury note yield. So I don't know where it's going to go from here, but it's something to keep a very close eye on. Next chart, TIP divided by IEF. This represents inflation expectations, and like I said on Friday, it's after 5 now, so we can actually check the thread. Let's pull that up. Yeah, so here it is. I said on Friday, we were seeing, specifically, I wanted to see if we were going to get above this situation of lower lows and lower highs in the 10-year break-even inflation rate, which sort of suggested to me the expectation of inflation being hot has been cooling off, and now we are definitely going sideways. Today, the break-even inflation rate eclipsing May 14th's high of 2.37 at 2.39. So this is not bullish for the chart of the 10-year break-even inflation rate. It simply is sideways. I think with all this tariff stuff going on, a lot of markets are expecting the CPI and PPI this week to be a bit hot, probably a bit hotter than what they're even saying they're expecting right now, and we get to see what that looks like tomorrow, specifically with CPI coming out at 8:30 in the morning. Last chart of the day, KWeb. I have about 10% of my portfolio in this as part of the equity side of my portfolio. Like Benjamin Graham says, and something I stick to, never have less than 25% equities, because, you're going to miss out on a lot of gains if you're out of the market completely. So 25% is the minimum. I think I am actually 35 to 40% in equities right now, personally, around in that range. Anyway, KWeb, one of my personal largest holdings, is doing something interesting here. We've been winding up, coiling up in a tighter range. So I'm really curious if this is going to break out to the upside. If it does break out to 37.73 to the upside or higher, that's when I'm going to be looking to perhaps look at selling, because that's the price that KWeb is at when there's a 12 trailing month PE ratio of about 20, which is still, for the type of companies that are in this, that's still very cheap. But from a Graham perspective, that's close to a fair valuation, and as a Graham value investor, that's what I'm looking to do. I buy stuff that seems ridiculously cheap, and I sell it when it gets to be a normal price. And so if we break out to the upside, that could happen as early as tomorrow by what this chart looks like to me. But that's all I have for you for today. The rest of this week could really be really interesting. You think about it, all the things coming out with the topping tail on Bitcoin as I speak. Bitcoin's about to make some pretty big moves. I think the S&P 500 is about to make some pretty big moves. We have CPI, we have PPI, we have the big bank earnings, all of this tariffs craziness. And never forget the continued claims, the jobless claims on Thursdays. That's been rising and rising. Once that starts snowballing and exploding to the upside, it's game over for risk assets. So we'll see how all that plays out. That's all for this episode. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.